We have with us Chaney, chief economist from Axa. Thank you so much for taking the time to speak to us. So how would you describe sentiment on the market since the launch of the Greek rescue plan?
Good morning. Well, I would say that for the markets, this 110 billion package has bought a lot of time for Greece, but that the proof that Greece will be able to repay its debt has still to be given. And the proof is largely in the hands of the Greek people. If they accept the austerity plan, which is coming from the EU and from the IMF, maybe things will go in the right direction. If they don't, maybe something else will have to happen.
We saw something of a rally in Greek government bonds on the back of the rescue package. The yield on Greece's two-year note or short-term debt fell to the lowest level in more than a week. Can we read much into that?
Well, that is true, but that is a consequence of the package. The package is basically insulating Greece from the financial markets for the next 18 to 24 months. So that makes a lot of sense that, over this time horizon, the markets have a much better feeling about Greece, simply because this time the money is coming from the IMF and euro area countries. But beyond this time horizon, the bets are still open.
So what is the feeling about the possibility of default or restructuring?
Well, let me tell you what I think. There is a big difference with Argentina and with other cases. The problems of Greece are coming from the fact that there was an overspending, mostly by the government, more than by the private sector, since Greece joined EMU. There is an excess of domestic demand in Greece, which is measured by the current account deficit. If Greece manages to cut its domestic demand by 5 to 10% of GDP, which is quite a big amount, then Greece will be able to finance its own government deficit via its own savings. That is the key issue. So the next question is the population ready to accept a drop in its own consumer spending, in, let's say, public spending on civil servant wages and pensions, or not?
I mean, we've seen protests, ongoing opposition to spending cuts, tax increases. How difficult is it going to be for the government to implement the necessary reforms, and how much confidence do investors have that these reforms will, in fact, take place?
I think it's a big challenge for the government. Mr. Papandreou was elected on a very different electoral platform, which was to raise public civil servant wages, and he has to do exactly the opposite. So I think for the markets, at least, there is a big question mark. Will this government be able to convince a majority of the population, if not the opposition, that it's the only way out? If it is not the case, then we might have snap elections, a new government, and we might have a renegotiation on the Greek debt.
And presumably that could create even more instability. And we're just seeing pictures of protests taking place now. And I think a union representing some 500,000 workers in the country have announced a 48-hour strike starting from today. It's interesting because the EU has said that this is a loan, it's not a gift, it must be repaid. And at the same time, we've had the Greek Finance Ministry revise their economic projections for the next year. I mean, what are the prospects of Greece being able to repay this loan if their economy is contracting?
Yes, the fact that unions are opposed and are demonstrating is not a surprise. The surprise would be if they had welcomed the package. And now, as you say, the uncertainty is whether this will be acceptable or not by the population. Basically, if the government manages to cut its own spending bill enough,
Chaney,
things
chief
will be
economist
okay.
for Axa, thank you so much. We do appreciate it.